know that frustrating feeling when you finally decide to buy something and the price immediately drops? Imagine buying a new phone and seeing it on sale for $200 less just the next day. Now, imagine that same feeling but with your entire investment portfolio. You bought Bitcoin in late 2024 because you believed in the research, you understood the technology, and you saw the institutions finally arriving. BlackRock had their fund, and MicroStrategy was buying billions of dollars worth. Yet you are watching the price bounce between $85,000 and $98,000. You keep asking yourself the same question every serious investor is asking right now. The adoption is real, so why is this asset not at $150,000 yet? What exactly am I missing in this complicated puzzle? My name is Tom, and I spend a lot of time thinking about why assets do not behave the way they are supposed to. I used to think the idea of banks manipulating Bitcoin was just a conspiracy theory. I thought it was the kind of thing people posted late at night with no evidence. But then I started digging into the actual mechanics of how modern financial institutions work. I found out how they can legally suppress asset prices using structures that have existed for a century. We are not talking about a shadowy backroom deal or anything illegal. We are talking about financial structures that are perfectly legal and extremely effective. These are the same playbooks used to collapse companies worth billions in the early 2000s. If you own Bitcoin, you need to understand that this same strategy is likely being deployed right now. Let me start with a story that sounds unrelated but explains everything. Back in 1982, the country of Mexico did something that seemed very smart. They borrowed billions of dollars from international banks to fund their future. But there was one massive problem with that deal. That debt was denominated in United States dollars and not in Mexican pesos. Mexico does not control the United States dollar, and they cannot print it. When the Federal Reserve raised interest rates to fight inflation, Mexico's debt exploded. The dollar got stronger and the peso got weaker, which put them in an impossible situation. The International Monetary Fund stepped in with what they called a rescue package. But that rescue package meant Mexico had to sell off pieces of its own country to pay the banks. They had to privatize state companies and cut social spending to satisfy the debt. This exact pattern has played out in dozens of countries over the last few decades. What I am describing is called a debt spiral. The reason it is so devastating is because of the psychology of losing control. When you owe debt in a currency you do not control, you lose your sovereignty. Right now, there is a company that holds over $60 billion worth of Bitcoin. That company is structured in a way that makes them vulnerable to this exact same trap. Imagine you own a house worth $500,000. You take out a line of credit for $100,000 at a variable interest rate. At first, the payments are low and you can afford them easily. But then interest rates double and your income stays exactly the same. Suddenly, you are making desperate decisions just to avoid losing the house. You might sell the house at a loss or take on even worse debt just to buy a little more time. The bank that lent you the money knows exactly how stuck you are. This is what I call financial pressure without a financial crime. The bank created a structure where your interests are fundamentally misaligned with theirs. Now scale that up from a single house to $60 billion worth of Bitcoin. Imagine a company with $16 billion worth of convertible bonds and preferred shares. That company is MicroStrategy, and they are the key to understanding the current price action. On paper, they are a software company, but in reality, they are a leveraged Bitcoin fund. They raise money by selling stock and issuing complex debt to buy more Bitcoin. As of today, they own over 450,000 Bitcoin. They are sitting on massive, unrealized gains, but those gains come with heavy obligations. The convertible bonds have interest payments, and the preferred shares have mandatory dividends. MicroStrategy owes about $700 million a year just to service this debt. That is nearly $2 million every single day that must be paid. Their software business only generates about $100 million in cash flow. That is not nearly enough to cover the $2 million a day they owe. They have a cash reserve of over $1 billion to pay these bills for now. But that reserve will only last about 20 months at the current rate of spending. This is where the possibility of a debt spiral becomes very real. As long as their stock price stays high, they can keep selling shares to raise more cash. It is a beautiful flywheel that works as long as the market is optimistic. But what happens if the stock price stops being so high? What if the market decides it will not pay $50 billion for assets worth $30 billion? Suddenly, MicroStrategy cannot sell shares without hurting their current investors. They stop issuing equity and that 20-month clock starts ticking down. If they eventually have to sell Bitcoin to pay their debts, the price of Bitcoin will drop. If the price of Bitcoin drops, the stock price will fall even further. This creates the classic death spiral that banks have used for decades. You might wonder why any bank would want this to happen to a Bitcoin holder. The answer is found in the dark psychology of institutional investing. Major investment banks have clients like pension funds and sovereign wealth funds. These big institutions want to own Bitcoin, but they have very strict rules. They cannot just buy it on a regular exchange because of regulations and volatility. But they would love to buy Bitcoin at a massive 20% discount. If MicroStrategy is forced into a position of distress, they will need to sell a lot of Bitcoin. They will not sell it on the open market because that would crash the price instantly. Instead, they will call a major bank to perform what is called a block trade. The bank will agree to buy billions of dollars worth of Bitcoin, but only at a steep discount. Suddenly, these banks acquire a massive amount of Bitcoin for $70,000 instead of $90,000. They then sell that Bitcoin to their institutional clients at a significant markup. For this to work, the banks need MicroStrategy to be under extreme pressure. They need the stock to trade below its actual asset value. And how do you create that kind of pressure on a company? You short the stock and you spread negative research reports to create fear. I am not saying there is a secret conspiracy in a smoky room. I am saying that history shows us this exact playbook has been used before. In the early 2000s, there were deals called flawless convertibles. A struggling company would borrow money and pay it back in shares of stock. The lower the stock price went, the more shares the lender would receive. This created a massive incentive for the lender to push the stock price down. The Securities and Exchange Commission found that companies in these deals lost most of their value. This was perfectly legal, and it wiped out thousands of regular shareholders. The debt structure at MicroStrategy is different, but the pressure is the same. Hedge funds and banks are betting that eventually the pressure will become too much. They are betting that Michael Saylor will be forced to sell at exactly the wrong time. This is not about Bitcoin failing or the technology being broken. This is about financial structures being weaponized against the largest holders. So what should you do if you own Bitcoin and feel this pressure? The first step is to realize that MicroStrategy is not Bitcoin. Bitcoin is a decentralized asset, while MicroStrategy is a company with debt. If a company makes risky financial decisions, that does not mean the asset is flawed. The second step is to recognize that this pressure actually creates a massive opportunity. If the banks are trying this hard to get Bitcoin for cheap, it means they really want it. They believe in the long-term value so much that they are engineering ways to steal it from the weak. The worst thing you can do is panic and sell your Bitcoin during these manufactured dips. They want you to sell at $85,000 so they can hold it until it reaches $200,000. Pay close attention to the quarterly reports and the cash reserves of these large holders. Until they are actually forced to sell, all of this is just psychological warfare. Professional investors do not just react to the price moving up or down on a screen. They ask why the price is moving and if the fundamental reason for owning it has changed. If the price is being suppressed by financial engineering, they do the opposite of the crowd. They buy more because they know the pressure is temporary and the value is permanent. This is how wealth is transferred from the impatient to the patient. Bitcoin is the perfect asset for this game because it is naturally volatile. Retail investors panic when they see a 20% drop, but institutions look at the data and see a once-in-a-lifetime buying opportunity. Think about the gold market in the 1990s when central banks were selling. They sold their gold at the absolute bottom of the market for nearly a decade. Private institutions bought that gold for cheap and watched it quintuple in value. The pattern is always the same. Institutional pressure creates a bottom for smart money to enter. If you believe in the long-term thesis of a scarce digital asset, do not be distracted. Short-term price manipulation cannot change the fact that they are printing trillions of dollars. The volatility is the price you pay for the greatest performing asset in history. The only way to win this game is to understand the rules better than the people trying to take your money. They want your Bitcoin, but they do not want to pay the full market price for it. Hold your own keys and stay focused on the horizon rather than the daily noise. Knowledge is the only defense you have against the mechanics of Wall Street. If this analysis helped you understand the game being played, please subscribe to the channel. Leave a comment and let me know if you feel the pressure of this debt spiral. I will see you in the next video.